In this video, I'm going to show you how I manage my SPX spreads to make over $700 on a single Friday expiration. Be sure to watch until the end to see how the final spread played out. It was a pretty crazy end of the day. To learn more about our SPX course and chat room for trading SPX for income, check the description for details. And don't forget to hit that like button to see more trading videos like this. And we're starting right now. All right, so we're about to start our Friday 0DTE trade, but a lot of times what happens with 0DTE, at least for me, is that I might already be in some different trades that were started yesterday or a few days ago that expire on the same Friday. So I need to check what I currently have opened, because what I try to do is not overlap the trades, because I don't know if you've been in a trade before where you've sold one strike and bought another strike, and then you go to do a similar trade and you end up buying that strike back, and you end up with kind of a skewed position that maybe wasn't what you intended from the get-go. So let's go ahead and look at the chart. This is what I have existing going into Friday. We're before the bell. We got about 15 minutes before the bell. And you can see that this is my current risk. I got some call spreads up here, and I'm in a broken wing butterfly from a few days ago. Both are looking profitable. And if I go to the option chain here, you can see where the actual prices are. In this moment, the ES is up about 8 or 9 points. So that would put us somewhere around 42, let's call it 45 or 42.50, somewhere in there. So if I go on the curve, 42.50 is going to be on the higher end of what appears to be an iron condor of sorts. So I need to be careful with the call side here. But for the 0DTE trade that we're kind of talking about, I'm looking at selling just out of the money bull put spreads. In SPX, I'm going to do 5 wide. And that's what that's going to do is push some of that risk up and bring some risk on the downside, because my broken wing butterfly in this moment is already kind of out of the money, if you will. So if we look at the table here, let's say that I'm going to go ahead and set up 2 bull put spreads at the 42.45, 42.40. These prices are not right because it's before the bell. But what that's going to do is, create a dip, because if we pull back to 42.30 or whatever, I would get max loss on that particular trade, but I would gain on the bull call spreads and the broken wing butterfly, make some money down here. So basically, this is what I'm looking at. Let's wait for the market to open, and I'll update the video then. All right, so the market just opened, and as I mentioned before, we're getting a little bit of a gap up and we're fading already. And typically what I'm trying to do here for the 0DTE is let the market open a little bit. We like to wait until 9:45. That's what a lot of the backtest research we did, because a lot of times the opening prices are so all over the place. If you try to put a spread on, you'll see the credit and everything just bouncing all over the place. So when you get into the world of backtesting, it's really hard to get a legitimate fill that you can trust. So we like to wait until about 9:45 when things kind of settle down, and then that's where we sort of enter. And that gives the market a little bit of time to open. So we're looking at the 5-minute chart, and we have a little gap up. Maybe we can fill the gap, maybe not. If we go back to the risk profile of the existing trades I had we're trading around 42.45. It's right between my strikes. So I'm going to give it a couple minutes, and let's go back to the trade table. And I took that trade off, but I would probably look somewhere in here. If we can hold this level at 42.45, I will look to sell an at the money put credit spread. Right now that's going for $1.80. And see, here's the problem, is if I actually try to move the strikes lower, I'm going to be overlapping my existing trades with some of these other strikes. So this is, something I don't really want to do. And that looks kind of weird. Why are those over there? Tastyworks. Oh, Tastyworks. You're so good, but so glitchy. All right, let's see what happens. I'm going to update the video in a minute. So one little trick, whenever you get with Tastyworks, when you get any kind of glitchy stuff, what I do is simply pull it out of full screen mode and pop it back in, and then you can see that my current position's popped back over. So this actually looks right. I see this a lot with with some of the other things too. Is just graphically, sometimes you got to minimize it. Not minimize it, but just pull it out of full screen and pop it back out, and it seems to kind of correct itself. But anyway, looks a little bit more sense. So if I'm looking to sell an at the money put credit spread for today, What I don't want is to overlap my existing broken wing butterfly, my existing trade from a few days ago, because part of the reason is, I mean, technically you can do it. There's nothing wrong with the risk and the profile. It's just going to create a different position, and it's going to be harder to get out if you decide, like if I decide, okay, I want to close the butterfly, I have to really kind of be a little bit more particular and get in there and close that. But also for tracking purposes, I use a software called Wingman Tracker. And when I go to export this, later in the day and import it, it can, it just creates a lot of extra headache. So for me, it's not worth overlapping the strikes. If for some reason I can't get the strikes that I want, I could very well just skip the trade and let my existing trades play out. So that's something that, kind of got to contend with. So let's go back to the curve. And here's the trade if I were to put on that 0DTE bull put spread. So it affects the overall risk profile of my existing trade. So I'm going to give it a few minutes. I'll update the video then. All right, so we're approaching the 9:45 time frame. Again, I'm in Eastern time for those that aren't aware. So we're about 15 minutes, almost 15 minutes into the open. And the market's hanging into its gains, hanging onto its gains. And you can see, I'm looking, here's the 5-minute chart. Got a little resistance around 42.50, and we're kind of trading sideways here. One thing that I will note is that the VIX is actually down about 4%. So that's a good sort of bullish sign that maybe the strikes we could hold. And I'm looking at a couple things here. So first of all, if we're trading at 42.45, it's like we're getting a little pullback. If I sell right at 42.45 and buy the 42.40, do I have two contracts? Yeah. So if I look at the curve, this is kind of what my combined positions would look like. So I got a little dead zone here, break-even area, a really good profit area if it kind of stays current levels, and I've evened out my risk a little bit because over here I could lose 1,000 if we get too much of a rally and lose 1,000 if we get too much of a downfall. So I'm really kind of sitting here. Now, if I were to move the strikes up, it kind of makes it interesting. I would actually get more credit. But it actually reduces the loss on both sides and increases this zone. And I think what that probably does is it changes my break even from right now, the upside is 42.60. So if I move the strikes up, my break even on the upside would be actually about the same. So, it doesn't seem to make sense, if you were selling the put credit by itself. But, I need to combine all my positions and look at my risk for everything. And I'm going to give it another couple minutes, but I'll update. But this is what I'm kind of adjusting. Do I move it here? Do I move it there? What does that do to my entire position for the day? And it looks like it probably spreads the dead zone out a little bit. But regardless, wide is good, profit zone good. Let's give it a minute and see what we can get filled. All right, I'm going to go ahead and go with selling the 42.50 put and the 42.45 put, two contracts, for a credit of 260. I know these are a little bit in the money, but I like my overall risk profile. And then throughout the day, what I can do is if the market starts to rally up, I could take profits, or if the market starts to shift lower, I could take profits on the bear call spread side. So it's not a done and deal, trade for now. Ideally, I won't have to do anything, but I'm gonna have to monitor that throughout the day. So I'm trying to get filled at 260. I'm gonna give it a few minutes, but I'll update the video later with what I actually got filled with. All right, so here's the option chain. These are the positions I'm in. These have, layered in over time. The broken wing butterfly was put on Monday, like 4 days ago. This bear call spread was put on yesterday. These were the put spreads that I put on this morning. So basically, again, this is what I'm looking at for the day. I'm gonna let this ride. What I did do is go over to our SPX chat room. So if you're interested in trading these with us in a group, you can find that over at stockmarketoptionstrading.net, and there's an SPX 0DTE class, and the class has the chat room. So you can see that I'm posting my charts and things in here, and there's a couple other traders in here that got in at certain prices. So we're doing this together, and this is all based on the course material and all the backtesting research that we do with the intraday backtester that we custom built. So now we just wait. We got to let time pass, and as the options and prices move around, I will look to maybe manage winners and take things off. So I will update the video later, and we'll see you in a minute. All right, so we are at 10:26 a.m. That's about an hour after the market opened. and we're definitely getting a little bit of a pullback. We've been seeing this a lot lately, and it looks like we're, basically filling the gap from the cash open on SPX. And but what I'm still seeing is the VIX is actually still down on the day. So I'm not too concerned yet. Obviously, anything can happen throughout the day. But a lot of times we've been seeing just like kind of general fluctuations. So what I just did, because the market's going lower, is I went ahead and closed the bear call spread side of my trade. Let me show you what that looks like. So yesterday I opened the bear call spread for $1.55 at that 42.55, 42.65 strike. So now that bear call spread is only worth 40 cents. So I bought it back for 40 cents. So I booked, with 2 contracts. I don't know what the math is. I booked a couple $100 on that trade. So I need to keep that in mind when I'm looking at my risk that I have booked some profits. So if I do 155 minus 40, that's 115. Subtract out 5 for a little change for fees and commissions. So I'm looking at $220-ish. So let's go ahead and look back on the curve to see what my position looks like now. So now I've taken, as you can see, I've taken the bear call spread off. And now I actually have a negative profit zone in here. But remember, I booked $220 for the zone. So even though I could lose 130 with the rest of my positions, cumulatively, I'm still up if we expire, let's say in the 42.40 area. So at this point, I have 0 upside risk, but I still have risk to the downside. But again, that risk is a little bit skewed what you're seeing on the chart, because even though I could lose $1,000 here, I've already booked a couple hundred in profit. So that's, the part of the game. So what I'm hoping for is that the market finds support, if you will, near that break-even cash gap. That's about 42.39. See, we're getting a little bit of bounce now, but it's still early in the day. And I'm continuing to watch the VIX. Now, if for some reason the market moves lower, we can move all the way down to 42.30, even 42.26, and I'd basically about break-even level. But even if we move down to 42.30, I could have a pretty good day. So it would be up $870. So if the market moves higher, I could be up even more. So we'll see what happens, and I'll update the video in a little bit. All right, so I went ahead and closed the broken wing butterfly trade. I ended up making $400 on that trade. That trade was put on Monday last week. And the reason why I closed it is because the broken wing butterfly was out of the money, which is good, but it's outside that profit tent. So the most you can make outside of that, for me in this particular trade, was about $350. But because the market had pulled back a little bit today, I was able to close it for a little bit more. I was able to book $400 of profit. But I knew that if the market just kind of stayed flat, that I could actually lose a little bit. I would actually need the market to go a little bit lower to really get in that profit tent area. So I went ahead and closed it. I booked 400 or so on that trade. And then as we talked about, I already booked $220 on the bear call spread that we talked about earlier. So now what I'm left with is basically the bull put spread from today, which is not looking good in the moment, but we still have several hours to go. The market could rally back up. The market's been very range bound. So if I've already booked, just over $600 on my expirations today, obviously if the market stays here or goes lower, I'm going to lose this 480. So I would minimize my losses for this to only minimize my gains to $200 or so, which would not be horrible, right? I'm still in the green. But if we do get a rally towards the end of the day, I could make that extra $500 plus the $600. That would put me at $1,000 for the day. So right now, not doing anything. I'm going to let it go, and I'll update the video in a little bit. Okay, so we're near the end of the day. We got about 25 minutes to the close. And my 0DTE portion of all my expirations, it's not really looking good right now. You can see that this is the 5-minute chart still. We are at 42, what's called 42.39, 42.40. My break even for the trade today is at 42.47. So I'd actually need a 7-point rally, which is actually not out of the question, but this is just what it is. Sometimes it's so close. Right now, the spread has gained in value because it's in the money to where it's almost a max loss in the moment. I could probably buy it back for 470, 480. Is it worth it? Is it not worth it? I prefer to just try to let the math play out because you never know what can happen in the last few minutes. But as we know already, here, let me bring up the risk graph. As we know already, I'll probably lose, if it goes this way, I could lose $480. But remember, I've already made over $600 between the bear call spread and the broken wing butterfly. So no matter what happens, I'm going to be up on the day. Obviously, it's not up a ton, but green is green. I'm going to give it another 25 minutes and let this play out, and I'll be right back. I'm back. You'll never believe what happened. This is a crazy rally in the last, I don't know, 15 minutes of the day. I thought for sure this 0DTE was doomed. I'm in the chat. Other people had sold a little bit lower, so they actually were making money. Mine just cleared my break-even point. My break-even point was 42.47. This is the 5-minute chart. So in the last, 20 minutes of the day, the market rallied from 42.40 up to 42.47. That actually means I made a partial gain on that spread that I was afraid of losing so much. Remember, let me bring up the risk profile. Here's where it is, just above my break even. I think right now my P&L is showing I'm up like 80 bucks, but between the two spreads, so let's call it 40 bucks a spread. So if you couple that with the 600 plus today, I'm up maybe close to 700 on the day. I'll take it. It's Friday. Have a great weekend. And if you're interested in learning these strategies, check the link in the description, and we'll see you at the next video.